I don't want you to buy a home this year without knowing these things. If you're a family or a couple that's looking at making the move up to a larger home, maybe buying your first property together, which is always super exciting, or maybe you're in the luxurious space of, kids are all gone and now you're trying to figure out what life is like, well, this video is for all of you. Today, we want to uncover 3 topics that typically aren't covered by real estate agents, and I think you're going to find a little bit interesting. So if you're planning on making a move in 2024 or in the future, this video for sure is for you, so stick around to the end because we got some great insights that could help you make the right purchase this year. The first thing we want to talk about is debt. Ensuring all your consumer debt is sorted out and you have a plan, because credit card usage is on the rise compared to past years, and it's just easy to get into some deep consumer debt. Take a look at this. This is the average consumer balance by product as of Q3 2023 versus 2022. And as you can see, auto loans had a 6% increase from year over year. Credit cards had a 9% increase year over year. Your installment loans saw about a 3% increase. Lines of credit actually dropped 2.5%, and mortgages increased about 3.8%. So even though credit cards are not the largest source or typically the largest bad debt that you can have, a lot of people easily can just swipe away and spend away and just build up a pile of debt that isn't helpful for them when they're trying to purchase a property.
I have $30,000 in credit card debt.
Now, according to a report done in Q3 of 2023 from TransUnion, they reported that a total Canadian active credit consumer debt, that's a mouthload, is at an all-time high of $31.2 million. And if you look at a 90-day delinquency rate, the country is up 8.5%. So as you can see on this chart, in Canada, we are up 8.5% in people not paying back or are late on their loans, right? Not paying their credit cards. If you look at Alberta, where we are only up 2.2%, but Ontario, they're up 14.2%, and Quebec, it's up 15.6%. Well, British Columbia, they're the only ones that actually basically stayed the same, but they dropped 0.7%. So credit card usage, lines of credit, these are on the rise and people are using them a lot. And truth be told, anytime you hold debt for a long time that you have, that's just sitting there, you don't feel like you're paying it off, you're making any progress on it, can really take a toll, not only on yourself, but on your family, on your relationship, on your health. All of those things come into play. In a recent Money Sense article, it was said that when you combine the way the current pace of inflation is affecting everyday needs like food and gas, coupled with the impact of our post-pandemic spending on things like travel and entertainment, it's not surprising to see these types of numbers. And credit card spending is reaching historically high levels. High consumer demand for credit cards means a competitive marketplace for lenders. As a result, the credit limits being offered on new cards are much higher than we've seen in previous periods. So when it comes time to the banks giving you more credit limits, there's kind of 2 trains of thoughts here. The one is don't take it and just use what you have. And the other thought is take whatever they can, but don't use all of it. And whatever side of the train, the tracks you're on, you have to do what's right for you. Ultimately, when you're going for a mortgage and you're trying to purchase a property, they are going to look at how much debt you have based on the percentage of how much credit you have available. So if the bank is offering you higher amounts on your credit cards or your loans, it's probably wise, talk to your financial person, but it's probably wise to accept it, but don't use it. Because what that does is that actually increases the amount of credit available versus the debt that you have, and that can actually help you when it comes time to buying a property. So like I said, having a large or even some amount of debt that you just don't feel like you're making any progress on and getting rid of can kind of take a toll on your life, on your family, your relationships, even your ambitions and what you're wanting to do. Getting getting up in the morning might feel a little bit harder. All of those things can contribute to just your overall being. And so we want to give you a few tips. If you have a lot of debt, I'm not a financial planner, but these are some simple tips that might help you to get rid of some of that before you buy a property. The first one is make a budget. Even if it's a very simple budget, knowing what's coming in and what's going out, what I suggest is making little steps and tiny improvements that feel almost too small, when they're compounded on each other, can actually turn into a lot of advantages for you. It can really help you move forward, and it kind of creates some confidence inside of you that you actually are moving forward on something. The second tip is kind of one that's not always commonly talked about, but sometimes you can negotiate with the debtor, the person who holds the debt, your credit card, your bank, whatever it is, and see if you can get better terms, better rates, all of that good stuff. And if that doesn't work, the third step is kind of consolidate or simplify or switch where the debt is. If you have the debt on a high interest, like 20% type credit card, maybe looking for a card that has a lower interest rate, or moving it to a line of credit, again, that has a lower interest rate. So then you're able to make the same types of payments, but paying off more of the principal versus just paying more interest, right? So these are a few things that can help you when you're making that consumer debt go away and getting it under control so that you can be ready to buy that property this year. So topic number 2, it's not something that I really think a lot of people talk about because it's about emotions. It's about things that really don't feel significant when it comes to purchasing a property, because it's not about the actual money transferring or how to do something. But what it's about is buying a house or buying a dog or, a car, or even having kids is not going to save the relationship. Buying a property is not going to save the relationship. And for some of you, that might be really, really hard to hear, because some of you might be in a position where things have not been going the greatest the last couple of years. Things are not in the greatest situation with the kids or the husband or the wife or the partner that you have. And you feel like if you make a commitment with them on something external, that will help the internal become better. But I ain't no relationship therapist here, but after being married myself for 20 years, helping hundreds and thousands of clients inside of our business make moves, and seeing many of them or some of them go through this exact thing and trying to talk them out of it, but yet they still do it, it doesn't always end well. But the reality is that divorces are on the rise since the year 2000. In the year 2000, there was about 1.88 million Canadians that were divorced, and in 2022, that has now jumped to 2.78 million individuals. So we are seeing an increase in divorced individuals in our country. And for someone who believes in marriage, believes in, the bond of two people committed to each other and staying true to each other, I really believe that is something very, very healthy, whether you're married or whether you're just together in a couple, whatever it is. But having a commitment to each other can really create a solid team in growing your future together. In an older poll back in 2014, there were 3 main reasons why divorces were happening. The first one is 68% of divorces were coming up because of financial issues, money issues. The second one was infidelity at 60%, and the third one was family disagreements, and that was about 36% of divorces. Now, I know this is nearly 10 years ago for the stats, but I can only imagine that the financial part, the number one, 68%, is probably even higher with all of the inflation, consumer debt, all of that has grown since 2014. So here's some advice coming from someone who has seen a lot of people go through tough situations in their relationships, and even myself being able to come to my relationships, come to my workplace, come to my friendships, come to my relationships with my kids in a better place because I'm not expecting anything from them. And what I mean by that is 100% of every relationship in my world is 100% on me. And if I think that it's a 50-50 thing, then we have a problem. And now let me explain this. I want to look at it as like a hub and spoke. So think of this middle part right here as you as an individual. Out here, you've got spokes that are going to all the different relationships, different things. One of them is buying a house. One of them is your connection with a partner, is your friendships, your parents, whatever it is. You have all of these spokes that are going around the outside, and they all tie to different things in your life. Now, if you're looking for that thing out here to make your life better, it's not going to work that way. You have to start in the middle, start working on yourself, and as you become the better person, focusing on your growth and your better future, then you can take the better version of you to that relationship, to that situation, and that actually is going to make that relationship, that situation, that adventure that you're going on a better thing for you, because now you are taking care of you and you're not expecting anyone else to do it. And I know that's not typically talked about on real estate YouTube channels, but that's kind of who we are. We want to make sure that you are in a good place. And truth be told, if you're looking for resources, there are some incredible resources for counseling in the city. Just go online and find some, because I know there are many, many out there. So our last tip that we want to go through, the thing you need to know before buying a property, so don't do it until you do this, is ensuring you have really good conversations with everyone in your world and using our 4 conversations guide that we have here. I'm going to walk through a few of these things, but I want you to go into the description, download this PDF, because it's going to give you some great insights, some great guidance on how to have really great conversations when trying to figure it all out. So the first thing you want to do once you have this guide is actually call a family meeting. So whether it's you and your dog, whether it's you and a partner, or whether you have kids, call a family meeting and get everyone together. And when you're there, start making a list of all the needs and the wants that you're wanting in your next place. Having everyone a part of the process and feeling seen, heard, and understood is really, really important, because these are the things you want to let us know as your agents, helping you through that process. Tell us these things. My little Sally daughter, who is 9, wants this in her room, and this is what my husband wants, and this is what my partner wants, and all of these things. And we can actually compile that list and help you search for the right property. Because if you're looking in one area of the city and you're wanting a certain feature and that's like a must-have, it just might not be available in that community because it was never built that way. So you might have to adjust your search where you're looking if there is a non-negotiable on that list, like 3-car garages. Not every community has properties that have 3-car garages on it. So in the guide, our first question here is actually, who are you now and who will you be in the future? I know it's kind of a weird question, but whenever I'm thinking of goals or where I'm going to be in the future, I always go directly to, okay, how old am I going to be? How old is Rebecca going to be? How old are my girls going to be? How long are we going to be married? You kind of start putting like actual numbers and dates to things, because it actually makes it feel a lot more real. So look at your kids, and you might have a 5 and a 7-year-old right now, or maybe you got 4 kids, whatever it is, but they have a 5 and a 7-year-old right now. And most people live in a property for about 5 or 7 years is typical. So if you make a move this year, your child in 5 years, you're gonna have a 10-year-old and you're gonna have a 12-year-old. I can tell you from my own experience that a 10-year-old and a 12-year-old are extremely different people than the 5-year-old and 7-year-old you have now. So you want to proactively think, because I'm not here just to always keep helping you buy and sell properties. We want to find something that you can really make a family home, that you can really grow in, and you can even stay in there for the next 10 or 15 years because you found the right one and made really good choices. So going through that one thing out of this document could be really, really, really valuable for you. The other thing I want you to be very realistic about is be honest about your current limitations. Knowing what is not working for you right now is going to be a huge thing in understanding what you are going to be needing in the future. And if you're trying to figure out if this year is the right year to buy it, well, this video over here can definitely help you sort that out, because we talk about, is this year the right year to be buying a property, with predictions and all. So we'll see you on that video.